Good morning and welcome to this morning's video. So I have West Texas oil on watch again today. Okay, I've just knocked soybean off. It did give an entry, but I couldn't take it obviously because it was higher risk, as I said, and I don't take higher risk positions until I'm in profit by 2% for the month. So I've just knocked that off now, and we have West Texas oil on watch. So once again, if you watch yesterday's video, you will know why I am looking at this. But for those that don't, and for those that do, perhaps I can give you a slightly different spin on this, give you some more of the things that come to mind as they come to mind. As I say, a lot of the things that I look for, well, all of the things that I look for jump out at me instantly when I'm breaking down these pairs, literally in a matter of seconds. But to explain them all during the course of explaining them all, I'd sometimes forget one or two just because obviously it takes a lot longer to explain things than it does to actually see things instantly, if that makes sense, if once you've been doing this for long enough. But anyway, West Texas oil. So we have this high here. We have the start of this piece of structure here. So if we just zoom out, actually, so you can see here, we have this high here. We come back up, we tap into it. We kind of near miss to here. So at some point, just zooming out on the weekly, perhaps we come down to here at some point and do something like that. Okay, because that would give us that kind of structure, which would be parallel. And then perhaps this is the middle section within all of this to take this high out, especially given how sharp it was. Okay. And then we get that kind of structure. That would make contextual sense, but obviously being the weekly chart, that is potentially a long way away. Okay, if we just zoom in, you can see we have this kind of this structure here. Okay, we break just above, move to the downside. But as I said yesterday, we get these sharp pullbacks and this scoop here, okay, which pulls back well over 50% of the move of this and this impulse here, giving me a clue that at some point maybe we come up to test this high because this was the high that broke through this low, okay, and this high near missed to it, okay. So maybe at some point we're coming down to here to take that out, to take out that high, to give us something like that, okay, and then this becomes the middle section, and then perhaps we push down from there. Just doing all of this on the fly, just analyzing what I've learned to see. Then perhaps we tap these lows out, which this low and this low near miss to. Then perhaps we move to the upside from there. Okay, this is just me doing what I do, breaking it down for you. What I do at the weekends when I'm breaking down all my pairs. But if we zoom in to here, you can see we did tap into this area of consolidation here. So you can see that we have consolidation there. We tap just above it, break to the downside. Price builds more volume there, okay, and then it breaks to the downside, and we smash through all of this, okay. So maybe this is a move. What I like about this is we've tapped into the area, we've moved down, and we've consolidated below this low here, okay. So what price is likely doing is it's likely consolidating here for a move down to the downside, okay. We have kind of rejected off of this low, but one thing I like about that is it's a higher time frame low. You can see yesterday we did tap into the area, but we wicked to it and not through it. Okay, so typically speaking, when that happens on the higher time frame, these wicks get filled, so that adds more weight to the short position, which I'd be looking for. I don't think this holds much weight anyway. Okay, but regardless, we have wicked to that area and not through it. So I'm just seeing this as a potential expanding pattern now, where we have let's try that again, where we have the lower lows and then potentially the higher highs within the structure. So the questions I asked myself, if I was going to be looking for a short trade from this pair, am I well positioned on the try that again. I don't know what's going on. Trading View need to fix that. Am I well positioned on the higher time frames for a move to the downside? Yes, we're trading below this. Am I well positioned on the lower time frames? Yes. What's the sequence like? Well, the sequence down from this area here is not fantastic. We get this kind of, so we have this kind of scoop double top there, and then we've got a lot of these sharp pullbacks. Sharp pullback. This one pulls back like about 75-80% of the range. Then we have a steep pullback. Okay, so we may be getting, we may get a bit of a sharp pullback because of these sharp pullbacks and this sequence. I don't really want to be trying to call the top here, getting a risk entry here. As I said, there's also many ways you could plot a trend line if you were to try and plot a trend line. So when it's like that, and we also have the retest at the back end of all of this, where we may pop a little bit higher and then push to the downside, I don't want to be trying to call the top of this structure. Okay, so I'm looking at the nature of how price has been moving. Okay, if it's been moving in that very sharp swinging manner, we have multiple ways that we could draw plot a trend line on, and we have the retest at the back of that. Then I'm going to be waiting for what I'm usually waiting for. Christmas. No, I'm joking. No, not Christmas. I'll be waiting for a tap into this area of value. We have the near miss there. If you remember in yesterday's video, I said we may, so we were down in this area yesterday morning. I said we may push up from there, to tap into that and then give this entry, which I'll be looking for. I said we also might come down to take this low out because it was sharp. Okay, and that's what happened. We tapped just below there, washed out all the orders, and then you can see we're moving to the upside. So what I like about this is with these expanding patterns is, so if we had pushed up from here yesterday, that would have been fine. Okay, but there's always a chance because we didn't tap into that area that I may have got my entry, price may have come down, tapped into that area, and then pushed up from there. Okay, when we've kind of tapped into that area already, when we've tapped into the low already, and if an entry shapes up like this afterwards, then if the liquidity has already been taken out there at that low there, then it's more likely that this will just smash through. Okay, so if we get this entry and price reacts from that area, then if the liquidity has already been taken out from that area, then this will likely smash through. And not only is it more likely to smash through, let's say we had reacted from here yesterday. If this entry was to shape up, I would only have about 4 or 5% to the low, whereas now, given that we've reacted from there and this is the new low, we would have about 7% to the low, 7.5%. So this is one of the reasons we prefer expanding patterns. Okay, so I can now have that down there really. There is one other thing. This may not be ready by the end of the day. Just looking at this, okay, just analyzing price action again. If we just drop to the 15-minute chart, you can see that where price started to correct here. Okay, so there was an impulsive move up, and then we kind of correctively moved up from here. So what price might be doing is it might be coming down to here to form something like that, to then push up, and then we would have that 1, 2, 3, which I would actually prefer. Okay, a 1, 2, 3. A 1, 2, 3 last leg is more confirmation of the idea versus, if we were to just get there, if we were to just get a tiny little consolidation there and then push up, this is more likely to, I think this was more likely to not be what we think it is. Okay, because for that to happen, the daily would look very strong. The weekly, although it wouldn't have closed by that point, would look very strong as well. I think, if we got that 1, 2, 3 last leg, that is usually when a 1, 2, 3 last leg like that completes at an area of value, it is more likely that we're going to reverse from that area versus if we just smash to that area in one straight line, if that makes sense. Okay. But regardless, what I'll be looking for today, I'll be looking for the same thing as I was looking for yesterday. I will be looking for a tap into that area, and then because of the sequence and because of all the other risk factors, which I explained a moment ago, I'll be looking for that 1 hour impulse down, a 2-touch 15-minute continuation, so a minimum of 6 to 8 corrective 15-minute candles, and then I'll be looking for an entry on the break or a risk entry within it if I could get it. So if we have the two bottoms and we come back up, if we test the first high, if it's a 3-touch, even better, but if we come back up to test the first high, then I would look for the risk entry within the flag and cancel the original order, if that makes sense, the order that I had set on the break. And then, as I said, I would have about 7% to the lows, but I wouldn't anticipate price stopping there. So, as I said, if we measure that, where price started to impulse there, that would take us down to that area. And of course, the break would now be there, which would actually be around that low. But this is the sharper move there. So what I would do is I would actually try and get the move all the way down to there. And I would trail my stop loss accordingly. So that is West Texas Oil. As I say, this may not be ready by the end of the day. And if this month or this year and a half is anything to go by, it may not be ready at all. But I'm really not bothered. Okay. If these entries shape up, great. If they don't, it's fine. Absolutely fine. I'll go and do other things. So that is West Texas Oil. Thank you very much for watching. And I will see you again in the next one, hopefully with a trade recap. If not, then it will just be another breakdown. Thanks very much for watching. Have a great rest of your day.